What got you there with Sean DeLaney? What got you there with got you?
When we do what we do, from whiteboard to kind of scale, at that whiteboard session, you have to flip your mental model upside down. It has to be completely different. You have to actually say, rather than why can't someone do something, you have to ask yourself, why can someone do something? And if that someone can do something, who would be that person to do it? And how would you do it?
Ed Sim is the founder of Boldstart Ventures, a first-check investor for bold founders reinventing the enterprise. Ed loves to work with engineering-driven founders with a laser-sharp focus on product. On this episode, Ed goes over his investing principles, where he developed his tenacious drive, and what he sees in the most successful entrepreneurs. This is a masterclass you will not want to miss from a 23-year veteran in the venture capital space.
Ed, welcome to What Got You There. How are you doing today?
Good, hey, Sean. Thanks for having me. I'm a huge fan of your show, so really excited to finally be on.
No, it's a true honor. You're someone I've learned a lot from, continuing to learn from. So this is gonna be really fun for me. But I thought a really fun starting place might be around lacrosse. We were both former college lacrosse players. You playing in the early '90s at Harvard. I would love to know, do you have just a lasting memory from your time there that's really stuck with you?
Yeah, I would say that. I remember when I was going to Harvard, a lot of my friends were giving me a hard time saying, you guys aren't going to be any good. Why don't you go to the ACC and play down there? And I remember my freshman year, we were actually number 3 in the country and flew down to Carolina to play in the quarterfinals. And, we knew we had the odds stacked against us. We ended up getting walloped, by your Tar Heels. But it was a great memory. I remember sitting at the face-off circle against my former teammate, Jim Busick, who ended up being Media of the Year that year, saying, man, I never thought you'd ever be here. So, in a way, that was quite a victory. And then while I was at school, I learned about this thing called venture capital. So I think it all ended up okay for everyone.
Yeah, certainly ended up in a good position for yourself. I'm wondering, did you have any teammates or even coaches that just had a really strong, lasting memory for you about who you are today?
I'm thinking about that. Actually, my high school coach, Joe McFadden from Loyola High School, had a lasting impression on me. Look, I wasn't the most talented guy coming out of high school, and growing up in Baltimore, I didn't even know anything about college lacrosse. I played football and lacrosse, and I did it because it was fun, and all my friends were doing it. And then junior year in high school, Joe's like, hey, Ed, I think you might be able to get recruited. I'm like, what's that? So, but the lasting impression that he said, I was a midfielder. And he said, hey, middies, when we do these suicide runs, he would always say, middies got to haul the mail. So he'd always make us do 1 or 2 extra. So he was extra hard on the midfielders, made us run. And ultimately, we won the championship in Baltimore my senior year. And my junior year, we were number 1 in the state until we lost to Boys Latin. So that whole mentality of just put your head down, bring a work ethic, bring your lunch pail every day, like that blue collar mentality is something that I carry with me every day and what I look for in founders as well.
So that chip on the shoulder, I would love to even circle back. I know in one of your college essays for your applications, you wrote about this, and I would love for you just to touch on this for a minute.
Yeah, I think, are you referring to that tweet about the HBS thing or more about the Harvard College thing? Because I put out a tweet that I had this chip on my shoulder because when I was in college, I learned about venture capital and I sent out about 120 letters. This was in 93. 120 letters by mail, nicely formatted, nice paper, expensive, to every private equity, venture capital, and LBO shop out there. By the way, I didn't know the difference between any of them. They all sounded the same to me. And I got one letter back. I was like, hey, kid, just get some work experience. So I went down to New York. And, when I was at JP Morgan, I was basically a glorified data entry analyst. Let's face it, that's what I was. But I was working on the derivatives team. And I would come in and enter data all day long every day, trying to put yesterday's prices into the model to figure out what we should be trading today. And my buddy and I, this guy, Jeff Grills, a Duke guy, was hilarious. Like, Ed, let's automate our job. So we started learning how to code. We learned Visual Basic. And so we started automating kind of our whole job to the point that a month later, we'd come in and enter 50 numbers, and then we'd leave for 3 hours and take a long lunch. And so anyway, fast forward, at that point in time, I downloaded Mosaic browser, which was the beginning of Netscape back in the day. And I was like, I really want to get into venture capital. I'd learned about it from one of my lacrosse teammates in college. And then I realized that everyone went to Harvard or Stanford Business School. And I was like, oh man, So I applied to those schools. I got rejected from Harvard and Stanford. This was 3 years out of college, but I got into Chicago and Wharton. And I was like, you know what? Maybe I'll try this venture capital thing. So I found an ad in the Wall Street Journal, believe it or not, Sean. And I faxed a resume in. That's how old I am. Sorry about that. And I got a call back. And they're like, hey, can you meet me like in an hour? So I met these venture capitalists in the city. They had somehow wrangled their way to raise money from the New York City Economic Development Corporation to turn New York City into a high-tech hotbed, whatever that meant, right? Yeah. But this was 96. There was no venture capital at the time. And the guy's like, look, you know how to code. Like, why don't you join us? So I ended up deferring from Wharton. I joined this firm for 2 years at the very beginning of the internet boom. And eventually I met my mentor, this guy, Bob Lesson. Bob was the vice chairman of Smith Barney. He was the head of their investment bank. Before that, he was the youngest vice chairman ever at Morgan Stanley. And he put about 15 million of his own money to work into angel startups. Like, he would basically invest all over the place. So he and I became friendly. And he's like, Ed, I'm thinking about leaving Smith Barney to start my own thing. And, part of it is I want to start the venture capital firm and you should run it for me. And I was like, what? He's like, you speak the young language of the internet. You understand those folks. I speak the old language of the corporate world of, how to talk to CEOs of the Fortune 500. That's what I've done. And together we can kind of bring the Silicon Valley approach with this New York twist to investing. And he's like, by the way, I know you just got into Harvard Business School. So finally, 5 years later, Sean, here's the chip on the shoulder. I got into Harvard Business School in 1998. I had the option to either join Bob and start Untitled Ventures and run it with him, or go to school. And I tried to defer. I was like, let me try to defer. And no, but at the time, if you wanted to become a successful venture capitalist, there was only one route. You go to Stanford Business School or Harvard Business School. That was it. That was literally it. If you wanted to be the best. And this show's about kind of what got you here. Why do you want to be the best? I was like, man, I guess I'm gonna have to defer that and try to go on my own path, right? It wasn't like you couldn't get a job at Sequoia or Klein or Excel or anything else. And so I've carried that chip on my shoulder for a long time. And so I ended up not going to school. Bob and I kind of started Don Treader, and in 2010, I ended up leaving. He unfortunately passed away, I think in 2011 or 2012, sadly. And I started Boldstart kind of around that time when he was sick. And that's kind of where I am today. So that's the story.
Talk about someone going against the grain. I mean, so many variables, like forget about not even being in Silicon Valley, New York, just taking on something new. I would love to know, though, what specifically about you did Bob see, right? It wasn't just that you were younger and you could speak the language. There must have been innate skills you had that he identified within you.
I think I was kind of always curious. I was always learning, right? So I kind of always ask people, like, what are you a geek about? You can be a geek about anything. It could be cooking, it could be working out, it could be like technology, but I was just intellectually curious just about kind of enterprise software. For whatever reason, I just fell in love with enterprise software. I wanted to learn everything about it. And I think I was not afraid. Like Bob, a lot of people could be intimidated by Bob, right? Because he's, super high up guy, very successful. And here I am, this young 25-year-old kid. But I'd like reach out to him like, hey, Bob, let's grab drinks, or let's check out this deal together. So, in many ways, I think just not being afraid of someone saying no, I think was really important. And then I think, too, is I was passionate about it. He could tell that I was fired up about this and enterprise software and venture capital. Like, this was my dream. And I think he could see that in me.
Yeah. When someone has that, I mean, it's just so obvious that it's oozing out of their pores almost. One of the things you mentioned within Boldstart is just courage and conviction. And that's something that is just innate in you. And you kind of mentioned that you had that courage. Where did this develop for you?
Yeah, I think I got to tell you, like, my parents are immigrants. So my father's North Korean and my mom's South Korean. And my father actually like walked like 100 miles kind of into South Korea and was pulled into the war when he was young. And eventually they made it to the States. So I was born in Baltimore in 1971. And just my dad started out in the mailroom at this kind of medical publishing company. He eventually became head of IT. But man, so we didn't have a lot of money growing up. I was that kid with the old shoes, with the shorts from Sears and whatnot, right? And so I always had this thing in me, just like I watched his work ethic. He just plowed through. And so I think that is part of it for me. And so I think that I've always had this chip on my shoulder, but my parents, I get a lot from my parents. I mean, I'm starting to read books right now on North Korea, just understanding. I'm reading a book called Dear Leader that one of our investors from an endowment told me about. But it's about kind of someone that was in the inner circle in North Korea and kind of, left and defected. And just hearing about that, because he doesn't really talk a lot about kind of what happened there, but it really gives me a lens into kind of, I guess, who I am and partly where he came from.
Your father actually escaped North Korea when he was 14 or 15, correct?
Yep.
Yeah, so this wasn't just about he started out in the mailroom. I mean, this is way before that. Just that chip in the shoulder, just the unbelievable ability to overcome adversity, it sounds like.
Yeah. And dreaming, right? So, and then he literally left with a trunk and my mother, and my brother is 4 years older than me, pursuing the American dream. And that to me was, and they instilled education. They worked hard. They made a lot of sacrifices for us to be here. And so I think that's courage and conviction, like unlike any you could ever imagine. And then I think just from that, I just look, I can't be afraid. Like I have to take risks. Like I can't just sit here and not take risks. Right. And so that was the thing for me. It was just, I feel really fortunate to actually have them instill that in us and the confidence. They're like, look, if you get a good education, you can do anything you want. And if you are driven and if you actually kind of work hard, like good things can happen. That's why we're in America. And that's kind of what I see in founders, right? I mean, we want to find founders with a chip on their shoulder that have this dream and passion. Like passion to me, really trumps a lot of other things, right? It can take you through the worst of times, the darkest of times. And yet if you keep plugging away, I've seen so many founders in our portfolio just eventually just make it. And that's what I love about this job. I mean, I get to help them make it just like my parents did, for me.
Yeah, if you don't have that passion, I mean, shit's really going to hit the fan. Anytime you're running a startup, so you better be able to plow through this.
Dude, this shit is hard, man. Startups are hard.
There's a lot going into it. It's funny though, because you are such an early investor, and we're going to get more into your thesis here in a minute. But I would love to just know, I mean, the first time meeting a founding team, how do you see through that, right? Like a lot of people can be a great salesman and kind of pitch themselves. How do you see that true, deep intellectual curiosity, that passion? How do you get that on the first time?
Man, Sean, you're asking some great deep questions. I love this. Look, for me, it's kind of like, look, I view myself as a founder because I started, Dawn Treader with Bob in kind of 1998. I started Boldstart with my partner, Elliot Durbin, in 2010. But, I think about the best founders start their companies born out of some pain or problem that they kind of experience. And we only fund technical founders, engineers who code, because these are the founders where they're like, oh man, like, I can solve this problem. I can code through this problem. I can automate this problem. Like just like kind of I did with the Excel spreadsheets. I automated my job and there's still lots of automation happening. And you can't sleep at night. You wake up in the middle of the night taking notes. You're in the shower, singing a song and then thinking about the problem. You're in your car. But that's the passion we look for. And I know it kind of juxtapose that against the type of founders that we used to see sometimes during the internet boom. The first internet boom, you had these carpetbagger founders where they would draw a whiteboard and say, okay, this company does this does this. And then there's this white space here. But they had zero experience. I'm not saying that's not a good thing. I mean, some people can be very successful doing that. But for us, and just kind of who we are and what DNA we have, we love the passion. We love born out of pain and experiencing that pain and trying to solve that, because those are the founders that will work through the hard times. Because Sean, you just said this shit ain't easy. Yeah. And they'll stick with it if they're fired up about the problem.
I absolutely love that. I'd be really curious to know, have you ever had a founding team come into you that doesn't have just above average ability technically, but you were almost sold on them? Or are you guys just so strong in your conviction that's not even negotiable?
We're pretty strong in our conviction. If you look at most of the things we do, it's really technical founders, but it doesn't have to be the whole team. It could be one technical founder and kind of one business oriented founder too, right? Because a lot of times, you can run into problems too, only funding technical founders, because what we like to say is that you have to have passion, but then you have to have this unique insight into what you're building as a product. And going hand in hand with the product is your go-to-market. How you build your product also dictates your go-to-market. For example, if I want to build a frictionless bottom-up SaaS application, I need to make it super easy for people to get onboarded, to use it, have incredible time to value. If I'm going to go into a large enterprise and sell a top-down $1 million deal, I better make sure it's enterprise ready. I better make sure it connects to all the databases. I better make sure that it has single sign-on and all these things. So that kind of how your product and what you think about really dictates the model. So it's not just technical founders, but they have to have a depth of thinking around go-to-market. They have to have a depth of thinking around telling a story, because that is the most important thing, by the way, too, is telling a story. Because if you can't tell a story in a very succinct way, it's hard to recruit people to join your movement, because you're probably creating something new or creating a new market. It's also hard to kind of convince people to buy your product, which may not even exist. So all those things are things we look at.
Yeah, a lot of variables at play there. I'm wondering, and this doesn't have to be someone you invested in, it might even be better if it's not. Is there a founder that kind of fits that criteria? And this could be throughout history, that's just easy for the listeners to identify with?
The criteria of just kind of defying the odds, or
defying the odds, technical background, being able to distill down their thinking to let that know for both pitching it to companies.
I can tell you a couple right now, but one in our portfolio that really stands out is a company called Snyk, SNYK.io, and the founder's name is Guy Pajarny, and Guy Po is a founder that we backed previously at his first company called Blaze, which he sold to Akamai. That was out of Fund 1. And then Fund 3, Guy and I had been chatting, every quarter, catching up. Guy, when are you going to leave? When do your stock options vest? Like, when can you start something? And he's like, Ed, I got 3 ideas. And I was like, Guy, the first 2 aren't really you, but I can see why you'd want to do them. But the third one, that's you. I said, I'll give you a check right now. And I said, if you find another co-founder, I'll give you a higher price. He goes, give me a month. And his idea was simple. He said, look, I believe that developers are going to become more and more responsible for kind of delivering code, and the speed at which they do so because of the cloud and open source is only going to accelerate. And I want to make the most developer friendly, the easiest way for developers to secure all of their open source code without actually having to waste time. So this technology will constantly scan all their code and all the open source modules they're using. And then not only would it say, hey, here's a problem or vulnerability, but click the button and fix it. And I remember that, we didn't have a huge fund at the time, by the way. So Fund 3 ended up being a $47 million fund, but we only had $20 million to start. But we were investing as if we had 40 million. So we wrote a big check on our side. And, kind of going with the courage and conviction story, but we still needed more money from other people. So I remember helping Guy, talk to other venture capitalists, and they're like, no, I don't think Guy can do it. I don't think he can evangelize. No, there's a company called Veracode out there. I don't think there's this developer friendly security thing. Okay. Fast forward 5 years later. By the way, the first 2 years were really hard because he really stayed onto this vision of, I'm going to make developers really happy and actually make security so easy for them. That was his whole North Star, developer friendly. Fast forward a month ago, we announced that the company's worth $2.6 billion now in 5 years. And this is Guy who people said he can't do it, who he said that developers don't care about security. And man, I'm so happy to see kind of what he's doing in the company he's building right now, because I think this could be, like on the levels of Datadog in terms of kind of bringing security into a developer way versus selling it down through the chief security officer. And so that is a great example of someone that I remember being in one board meeting where we're just like, guys, like, I'm kind of stuck here. Like, enterprises want me to go kind of deliver this new software on premise, but he's like, maybe I can kind of do a tweak where I can do a little agent where the agent takes the technology and obfuscates kind of the data coming through, and we can still provide the answer. So we did that. And then fast forward, here we are today. And so that's patience. That's courage and conviction. And by the way, we gave Guy 2 more checks. After the first check, we gave him 2 more checks before he even got to his first, big round to stick with them. And so that for us is just, he's passionate. He never changed. And now developer-friendly security has expanded from just open source to the cloud, to containers and everything else. And I just love that story about Guy.
That's a remarkable story. And I think it does a really good job distilling down what your thesis is as an investor with Boldstart. I mean, you guys are the first check, right?
We are. We love, we like to say it's like from whiteboard to scale, right? Because we love kind of that kind of, let's roll out the whiteboard together. Let's draw together, right? It brings out that kind of that exciting feeling. I got to also tell you another story about Superhuman, because I know a lot of your listeners probably, I don't know, Sean, if you use Superhuman.
Yeah, Rahul's, his story is unbelievable. Yeah. So I'm pumped about this.
Yeah. So we're Rahul's in Rahul's first company, Reportive.
Okay. Found them early, huh?
Oh gosh. So this is a repeat founder. Like our NPS score is if founders come back to us first, like we love it. Like Guy's first company, Blaze, but Reportive was kind of that, what I loved about Rahul was that just he hacked into Gmail and he built kind of that first kind of, he's responsible for all the bloatware inside of Gmail because now you can put applications tied to your email inside of Gmail, but that was him that started that whole process. There's something special about him, and he ended up selling the company to LinkedIn. And, of course, we every quarter like, hey, Rahul, when are you going to start your next thing?
Right.
When are you going to And so the thing about Rahul, though, was that, he's always had this vision of make people brilliant at what they do. That was it. From Reportive, it helped you actually learn about people super fast inside of email without actually leaving it. And that was always his vision and mission. And I remember that he's like, Ed and Elliot, I got this great idea. I'm actually going to own the whole stack. So the problem with what he did before with the Reportive was that he was tied to Gmail. And Gmail could giveth and taketh away depending on what they decide to do. It's like, I'm going to do the whole stack. I'm going to build the fastest email ever. And I'm going to charge people $29 per month or $360 per year. Like, are you freaking nuts? I mean, seriously, so everyone, there's this Twitter thread going over this weekend, but everyone's like, hey, email is a huge market. I'm like, no, it wasn't. No one was paying for email. Yeah. No one was going after. So Rahul started this whole thing, and everything he did was inherently unscalable in a way. He focused on product for the first 2 years, heads down. He was so into design and so into simplicity, but that's where the elegance and power comes from. Everything was like a command line interface, Command K, which everyone's starting to do now. But also, he was so detail oriented, he even built his own font. He made his own font to make it even easier to read, almost like a newspaper magazine like style. And then he slowly onboarded users. So, not only were Elliot and I kind of the first check-in, we wanted to be the first users. So we're the first kind of users outside of the team onto the platform. And I just remember kind of, when Rahul actually came and told us the story, he just showed up at our office, and my daughter happened to be there, who was 10 at the time, Skylar, and she basically was hanging out watching this kind of talk. And Rahul had this picture of Gmail, and then he had another picture where he X'd out a whole bunch of stuff and said, I want to make it super simple, go back to where it was. And they showed us this interface. And he was trying to explain it. And my daughter goes, it looks like text messaging for email. He's like, yeah, that's kind of it. And so anyway, we're in for the check right here. Here you go. Can we put $1 million in? Rahul's like, no, I'll only take 250. I was like, shit. So then it took us 6 more months to dribble in 250, before first round ended up investing. But the funny thing is that then you started doing this bespoke onboarding thing where you'd spend an hour. Actually, you would show up in person and walk you through, Sean, sit down next to you. And then it turned into 45 minutes. Then it turned to 30 minutes. But now, and then he also did the wait list. But now think about this. People thought he was crazy charging for email. People thought it was crazy doing something inherently scalable by doing bespoke onboarding. People thought he was crazy, for the wait list and everything else he does. But now look at the world today. Everyone, there's like a superhuman for X for everything, right? I mean, people now are doing bespoke onboarding. He's got his whole method of NPS score. He actually, which is basically could you live without this, right, or not? And so he basically started a movement when everyone said he couldn't do it. And that's what I love about Rahul, man. I mean, just he's stuck to his vision from Reportive to superhuman to where he is today. And he deserves all the credit because there are a lot of naysayers along the way. And now it's great to see people kind of, copying some of his models today when they said that it was inherently unscalable. I love that. That to me gets me fired up every day when I wake up.
Yeah, talk about someone just sprinting uphill against every obstacle imaginable. If you haven't checked out any of his stuff, he's got a lot of writing online. He's done some great interviews, but anytime he talks, it's just a pure masterclass in design, business thing, everything. So yeah, he's someone I've learned a lot from as well. So this is exciting to hear some of these early stories. One thing you mentioned a few minutes ago, though, about Rahul and his North Star and what drives him. And I'm wondering, though, it seems like a lot of companies from start to where they are in terms of getting to success, there's a lot of change there. How often do you see change from the initial vision to where they finally make it?
Yeah, it's funny. It's like I was actually asked by a reporter last week talking about the old pivot, right? When should someone pivot? When should someone not? I'll tell you, one of my early successes was I was one of the first investors in GoToMeeting and on the board of that company. And believe it or not, the company was called Expert City before that. This was like in 1999 1999. And the idea was that they had this core technology that would allow someone to take over someone else's desktop through the browser. So you didn't require a download or anything. It was just kind of right through the browser. The problem, though, back then was that we had dial-up access and there wasn't this trust out there. And they wanted to create a marketplace called Expert City for technical support, where you could get help on, like, let's say, doing a PowerPoint presentation or getting even, configuring Windows, which was kind of the predominant thing back in the day. And we ended up spending $10 million on that, and it actually went nowhere because it just, and so one day we're just like, the founders are like, look, we have this core technology. And by the way, that was our thesis. Was if the marketplace didn't take off, there's this core technology, like there's probably some value there. We could do something with it. They started this thing called Go to My PC. And they launched Go to My PC, and the thing just grew like crazy, right? I mean, it literally just started taking off. And that was basically, you could actually take over your desktop through your browser, like your home machine, you can access it from your browser at work and just do like financial stuff or whatever it was you're doing. And the company grew. It grew from like 1 million to $6 million to 17. And then we're like, I think we can disrupt the video conferencing market, and WebEx was the dominant player at the time. And they're like, let's come out with an all-you-can-eat pricing model. And let's leverage some of our desktop technology to do screen sharing. And let's just break up the monopoly and just change everything and be disruptive. So they came out with GoToMeeting, and boom, that thing went to 35 million. And then in 2004, it was a dark days, kind of the internet, because no one was public. I think Google went public maybe later that year. And we ended up selling the company for a fair amount of cash to Citrix. And fast forward up until about 2 years ago, that company, according to the head of M&A, who I became friends with, that ended up doing $600 million a year of ARR for Citrix. So part of it for me is timing. It's like we did well, but man, if we could have held on for another year or two and kind of hit that public market, it would have been another notch. But I felt really excited because here was these founders. They built a cool tech. It didn't work. The initial market didn't work, and look where it ended up today. And in fact, I think a lot of the folks at Zoom, the company was based in Santa Barbara of all places too. So it wasn't kind of your typical place to invest in, but a lot of the engineering folks from Zoom are actually from GoToMeeting. They're sitting in Santa Barbara right now. So I've been around a long time and seen a number of things. So it's just timing, right? Timing just slightly off. Look where Zoom is today, and look where GoToMeeting was. It was still fine. 10x plus multiple, but man, could add another 0 or 2 in that thing.
Yeah, that wouldn't be so bad. What I'm so fascinated by with you is just your decision-making ability, both because lack of information you have, and then the ability to take on that new information and make more clear decisions moving forward. So do you have a distinct decision-making process after meeting with a founding team?
Well, look, when we actually kind of think about founders and writing that first check, we covered something that I kind of think about as the 5 Ps for us. I kind of think about kind of the pain and the problem, right? What pain, companies that are born out of pain, as I mentioned earlier, are the ones where the founders kind of are the most passionate about solving those problems, right? Because they've experienced and lived it. So I kind of think about that. And then I think about kind of the product itself, right? Kind of what is the unique insight that you're bringing to the table? And then more in particular, the unique technical insight you're bringing to the table as you kind of go through that. Tied to that second P of product is, how do you think about go-to-market? Right? As I mentioned earlier, you can even, if you're going bottoms up, there's a different kind of product you're building and a different kind of methodology to kind of attack the market versus kind of going for the big, $1 million plus deals. Then I tie that to passion, right? The passion kind of comes down to, being mission driven, right? Nothing's going to stop you. This goes back to kind of what we talked about earlier, the sports days. You just keep running through walls. People are going to say no. And you have to, you can hear it, but use that to motivate you versus kind of knocking you off your kind of focus. And then final thing is for us is potential. Is there the potential to create a category creating company, right? And if you do this, how big can it be? So, what I like to talk about a lot is when you add those 5 Ps together, when we do what we do, from whiteboard to kind of scale, at that whiteboard session, you have to flip your mental model upside down. It has to be completely different. You have to actually say, rather than why can't someone do something, you have to ask yourself, why can someone do something? And if that someone can do something, who would be that person to do it? And how would you do it? So it's a completely different model, because look, we see, a couple thousand deals a year and we say no to a lot of folks, but, every once in a while you find that, and it comes down to the founder, right? Because that founder is going to be the one, oh my gosh, okay, if someone's going to do it, is this the founder that's going to do it? Is this the founder that's going to take on the giants? Is this the founder that's going to create the new market? So it's a completely different way of thinking. It's actually exciting. We don't get everyone right, but you find these great people. And many of the founders become our friends, by the way, just because you go through such hard times together, because it's going to be painful. And by the way, I think the fifth P I forgot to talk about is patience. Patience is really important because it ties into a few things. First of all, you have to be patient that things aren't going to get there overnight, because the hardest problems are going to take longer. You have to be patient that people like the venture capitalists want you to go do things faster. And inherently, they may not be the right thing to do, is burn all your cash and try to go faster when you're not really at truly product market fit. And then patience in terms of founders finding the right partner for them, who understands that there might be a few different twists and turns along the way before you're really ready to go. So those are the things that we kind of look for. And then we kind of test that with the founders. Like, we do a lot of reference calling. We do a lot of role playing, like saying, hey, if you went down this path, how would that look? If you went down this path, how would that look? But underpinning all of it is that they have a history of building something technical, right? They don't have to be a founder before, but they've launched successful products. They know how to code. They know how to do these things. So that's kind of how we look at it. And then, of course, there's nuances with all of it.
Yeah, no, that's really helpful, that 5P framework. I am wondering, though, and I could be completely off, and everyone's going to be totally different here, but are there commonalities you see in terms of the advice these founders are seeking, or the most direction you can provide for them?
I think that's a great question. So, look, there are a lot of great venture capitalists out there, a lot of great investors who are my peers. And I think what the world has come down to, at least at our stage, is specialization. Right. I mean, and I think that we've specialized in terms of kind of helping founders at the whiteboard level who are enterprise and are highly technical. We've helped them try to become great CEOs. We surround them with other founders who were technical founders that became great CEOs. We surround them with salespeople and go-to-market people who have taken it from 0 to 10, 10 to 50, 50 to 100. And we help put them on the cap table. So when we lead around, we might partner with another VC, but then we'll bring in kind of our quote unquote friends, and we'll say, which ones do you want? These are really good at developer-led companies. These founders are really good at SaaS. These founders are really good at this. And I always like to say it takes a village. It's like an old African proverb: it takes a village to raise a child. It takes a village to raise a startup, right? So you got to bring that whole village together. And it's taken me 24 years to build that village, right? To build that network. And I'm always learning. I'm always trying to add, more folks to our village of experts. And so if you are a technical enterprise founder, you want to be CEO, and you want kind of hands-on, patient advice, then we're the ones to go to, right? We're not for everyone. So I think part of it is that we've already biased ourselves towards this. And I think probably about 70% of our investments are more infrastructure, developer oriented, like the Sneaks of the world. But then our other 30%, we have the superhumans. We have Customer with a K, which I never talked about. This is Brad and Jeremy, who started their third customer support company to take down Zendesk, and they've raised $200 million as well. So we've kind of got that SaaS application layer, but that's about 30%. So if you're a founders in these categories, then and you want to learn kind of what Rahul did or what Guy did, because Rahul, Guy, and Brad weren't Rahul, Guy, and Brad 5 years ago. No one really knew who they were, and so that's what I love too, is finding these founders who have this chip on their shoulder that want to be Rahul, I'm going to actually do this thing, and I'm going to actually tell people how I did my thing, right? Or Brad and Jeremy at Customer, how they're going to take down Zendesk and they took a different approach. Or Guy saying developer first matters. So we want to find the next Rahul, Brad, Jeremy, et cetera. And obviously we've got some great women founders as well in the portfolio that we want to do more of as well.
Yeah, you bring up such an interesting point. You could have this unique talent with regards to a person, but until they're in that system, they're not going to reach that overall potential. So it's really funny to watch someone's trajectory once they get involved with one of these tribes. And it's funny that the fat tail of the 24 years of you building this tribe, I mean, just the access that the companies you invest in now have access to is pretty remarkable. So it's probably been really fun for you to be able to watch that.
It is. I kind of feel like we're just hitting our stride right now, Sean, because it took 24 years. It was building it drip by drip, brick by brick. A lot of no's. I mean, when Elliot and I started, raising a venture capital fund, you don't know how good you are for 10, 12 years, right? I mean, and the thing is, people think that venture capital is this glorious thing. Oh, you're a venture capitalist, you're this, you're that. But the reality is, Elliot and I started with $1 million fund in 2010. We didn't take salary for a few years. Our next fund was 16 million. We started out with 10, and then we took a while to raise that last bit. And then fast forward, Fund 4, by the way, which people say, gee, that put you on the map. You raised over $100 million, which is well over your target of 75. You also raised an opportunity fund, which never existed, to back up the truck and your biggest winners. But the reality of it is that took us. I was talking to our counsel the other day. The first time we sent the documents out to the final close of Fund 4 took us 22 months. 22 months. So I just want to tell people, like, I understand the pain that founders go through. And it's not like people were throwing money at us, from the very beginning. It was brick by brick, and it still was. And finally, I think, things have changed. Things have changed as the companies have hit in their trajectory. The ones that we said, hey, but this one's going to be really good. This founder is really awesome. But things have flipped. The model's flipped completely for us. But it took us 10 years. I'm not joking. Some people may have come out from the places where the pedigree, because a lot of it's about pedigree. Like, I didn't come from the top 5 firm. We're not in Silicon Valley. I didn't go to Stanford or Harvard, as I said before, which still sometimes it matters to folks. So we're in New York. We're doing enterprise. We're doing deep tech. Like, isn't that like media? Isn't that like? And by the way, I'll tell you, in Fund 4, 10 of our first 15 investments are global. Like, we just did deals in Ireland, Paris, London, Vancouver, San Francisco. Only one is in New York. So just like, you're investing all over the world at the very beginning. Shouldn't you be able to drive to their office? You are based in New York. You're doing deep tech. Shouldn't you be in Silicon Valley? So I think everything we've done has been bucking conventional wisdom, which is why we never fit into a box. And finally, like, when I was telling an investor the other day, I'm like, just want to tell you, anything that you can think about that's in a box, we're not in that box. So if that doesn't fit for you, then we're not for you. Like, I want people to understand that we're innovating, we're trying new things, we're going to continue to try new things. And so that's kind of the other piece of it too. That the other part of the business.
Yeah, this is what I love, just absolutely flipping models on their head. And it's so funny, just the overnight success for you guys, right? I mean, an absolute decade. So I love hearing that, because I think so often, especially in today, we're looking for that overnight success, and it just doesn't happen.
I love that, Sean. And by the way, I just have to tell you that I would never be able to do this without my partner, my wife, Kathy. Elliot calls her the silent third partner. I remember that this goes back to kind of who you know and who you are, and the support. You want to find people that make you better and support you. And I remember that in 2010, I was getting offers to join some Silicon Valley firms, but I'd be like one of 10 partners, like, and being the only East Coast partner, because New York was starting to get hot at the time. And I was like, Kath, I'd probably have to fly back a week at a time. She's like, Ed, I know you. You would be miserable. You'd be absolutely miserable. I'd rather you not make any money for 2 years. I'd rather eat out of all our savings, and have you be happy, and kind of, because I know this is you. I know you want to start something. I know you have an idea of how to do things, and she's stuck with us. And every part of our success comes down to having, a super supportive partner who believes in you. And she, there are times that were really rough where we couldn't raise the capital and do the other things that we needed to do. And she stuck with us. So I would just say that to anyone out there, just make sure that you have someone that is there in your corner, kind of helping you, because it's going to be hard.
Yeah, no, I mean, that's something I absolutely identify with. My wife, fully supportive there. And it's funny, I mean, you go down to those deep truths. I mean, they're going to hurt. You're going to face some harsh realities. But I mean, at the end of the day, you have that person in your corner, and they're going to look you in the eye, and they're going to basically be like, you can do this. I'm going to fully support, but you better not half-ass it. And so it sounds like you and I both have supporting people in our corner there.
Absolutely. I almost want to flip the question and ask you about how you started kind of your whole podcast, because you started from nothing too, clearly. And I would love to have that conversation some other time about how you kind of just crank through it, and like now you have one of the top podcasts out there.
Yeah, I'm definitely not going to let you grab the mic on this. Now, I want to dive too much into your story, but you were saying something a few minutes ago about this taking some of these payoffs in venture capital a decade plus. That gets back to feedback loops. So I'm wondering early on how you were really reading those feedback loops and knew if you were in the right trajectory or not.
As a company or as our firm?
As a firm.
Yeah. Well, it's one of those things that it kind of goes back to courage and conviction. It's celebrating the little wins. I'll give you a good story, like a company called Big ID. The founders are Dimitri and Nimrod. Kind of we're that first check kind of in their first round back in the day. And they had started this company, Big ID, to solve the PII problem. If you're a large enterprise, how do you know what personal information you have on Sean? It could be located in 30 different systems all over the world. And up to that point in time, no one had organized the data so that if you actually said, "Where's my data?" That you could actually get the quick answer. And that was 6 months before GDPR passed. I remember when we made the investment, we're like, look, at the very least, if they can automate that process of finding PII, like when a target got hacked, we could probably make some money off of that. There's probably a $500 million to $1 billion business there. If this GDPR thing passes and actually has teeth, then it could be actually even massive, right? But the thing is that Dimitri went out and Nimrod went out to raise money in the Valley, and they tried to start with $10 million, and everyone said no. They came back with hat in hand. They're like, all right. I was like, look, you guys try to boil the ocean. Let's start with one little narrow problem, which is called data discovery, and start there, and we'll give you money. And by the way, who's moving to Israel? Because they said they're going to build to Israel. So Nimrod's like, great, I'll move to Israel. So Nimrod moved to Israel. Dimitri stayed in New York. And I fast forward, I remember they got their first customer. It was a top 50 kind of company. And they're about to run out of money. They didn't have the PO signed, so it wasn't officially a customer. But if you called the customer, like, yeah, we're going to sign the next 2 months. And they're trying to raise another round of venture capital. And no one would fund them. I'm like, hey guys, we'll give you more money, right? Like we just knew that the sign was that they built the product, they're about to have their first customer, but it wasn't signed. But we're like, oh, we'll give you guys more money. To fast forward, then they actually were they wanted to raise more money because like we gave them enough money to last like 6 months, but not to like last a long time. And they still they had their second customer, another top 50 customer. Wasn't fully signed, and they weren't getting the valuations and term sheets they wanted. Like, oh, we'll give you more money. So then fast forward, the greatest thing ever was that no one believed in them. No one believed that GDPR thing was real. They're at RSA Security, which is the biggest conference out there. And there's something called RSA Innovation Sandbox, which is like a competition for the top startup. Super vetted, some of the top, kind of investors and security professionals are on this panel. The day that Dimitri was presenting, Mark Zuckerberg that morning was in Congress testifying about privacy. And so, wow, guess what? Dimitri won the competition. Timing. Yes, but if you wanted to start that company the day that Mark started, it's too late. He started it 2.5, 3 years before that. He won the competition, and then the rest is history. I mean, fast forward, he's probably raised 120 million plus. He's got 20 of the top Fortune 100 as customers, but that's an example of the little data points along the way where even other people weren't funding it. We were funding it because we saw the product, we saw the iteration, we saw the team that was building. So you see these other data points around it, because a lot of the things that I talk about too is that you can tell if things are going to be successful early or not with two things. One is product velocity, how quickly you're shipping product and iterating on product. And the other is hiring velocity, which goes hand in hand with product, because if you don't have the engineers to build, then, and it takes you 6 months from the time I give you a check and you're still just 2 people, then things are slow, right? So those two things, and that generates momentum. And so with like that company or some other companies, you can see that momentum coming fast out of the gate. If you see things get installed, you kind of have to talk to the founder and say, hey, what is stalling you? Is it that you feel like the initial idea is not the right idea? Do you need some more research? But you have to always dive in because you need to generate that momentum to get to that next place.
Ed, I absolutely love hearing all this. I'm just thinking, 25 years into your career, what do you think now, just assessing those 25 years, is your comparative advantage?
Oh, man. I think, what I'm always trying to think about is how to learn from the past, learn from the mistakes, learn from the misses, learn from what worked out well, and continue iterating, to be honest with you. And so that's kind of, I'm always a lifelong learner. And I'm always thinking on the weekends and Saturday morning when I'm writing my newsletter or Sunday, just reflecting on how can I do this better? How do I make sure that I don't fall trapped to survivorship bias? But ultimately, Sean, it goes back to what we look for in founders. I'm passionate. I love this, man. I love this.
You can
I'll
see it.
outwork you. I love this. I will outwork you. I'll bring the team in. Like we will do this, right? And so like we want, and I just love. I couldn't see myself doing anything else. And so that's part of it. Is I absolutely love doing this. And finally, all the things that we said that we wanted to do. The cloud is coming in 2010. We're going to start a specialist seed fund in enterprise. Like all of a sudden, the pendulum swung to enterprise about 2 years ago, which was like, wow, I've been talking about this for a long time, but no one really paid attention to us. And frankly, I didn't mind it. Honestly, like I like kind of plowing our heads down and then waking up like, oh man, cloud is big, right? Developers are big. So I think it's constantly trying to challenge ourselves and not resting on laurels and just kind of, I feel like we're going to outwork and I'll try to outthink. And I will not kind of just stand still and just say like, we've done well. Like that's not acceptable.
Yeah, this is one of those ones I wanted to ask. And then throughout this conversation, I just kept writing down more things like, oh my gosh, is this what he's going to say? And you can see just the amount of work. And it gets back to that lifelong learner throughout your career, the ability to compound that on top of each other, little wins here, little learning lessons there. I'm wondering, though, you talk about even doing your newsletter on the weekend. What's your information diet like? How do you stay on top of trends, founders, all of these things?
Yeah, so look, I learned the most from just talking to founders. I mean, like to me, I guess what I like to say, my partners and I talk about this, is that we want to find founders that see the future. My job is not to see the future; it's to find founders that can see the future. Maybe not 10 years ahead, like I said on the GoToMeeting side, might have been 2 years too early because if we had held on for a little bit, but see the future. And so, talking to founders always, I think we learn a lot. Two is just kind of being in the board meetings and just outside of the board meetings, the daily conversations that we have with our founders in the portfolio as they're navigating kind of scaling issues or closing new customers or thinking about go-to-market. Third thing would be my team. Like we're always chatting together and kind of learning from each other. And the fourth would be my other friends in the industry, other founders that we talk to, other VCs, and kind of coalescing that. And then I'll read in the morning. Like my schedule has changed during COVID. Like I used to get up like at 4:30 or 5 in the morning and do CrossFit, go to the CrossFit box with my wife at 5:30. And then, I'd come back and just, read for an hour or look at my email, and then I'd go to the city. Clearly that's changed. So now I've kind of gotten to the point where I get maybe like at 6:37, I'll work for like an hour and a half. And then like, we have our own kind of workout situation here at home. I'll get a workout kind of like at 10 a.m. and just clear that. I got to clear my head out, to kind of just forget about everything and only focus on that one thing. And then I'll get on, in the morning, I'll usually get on some calls with Europe. And in the evening, you do the West Coast, and then you have your meetings in between. But, I just every day I at least spend an hour and a half kind of reading or listening to podcasts or something just to kind of make sure I stay fresh, because there's so much to know and you're never going to know everything. And that's kind of the other exciting part about this job.
Yeah, it's one of the fun parts for sure. I'm wondering, this slight change in schedule, do you think you're more productive and thinking clearer during this time?
I gotta tell you, I was telling someone the other day, I always feel guilty or criminal in a way because like the world is falling apart. There's a lot of people that aren't doing well, frankly, and that makes me kind of sad. But on the other hand, just traveling, like last year, I traveled so many miles. I mean, right even before the pandemic hit, I was in Paris, London, San Francisco at the end of February, early March. And by not traveling, I've been way more productive. I gotta tell you, just having a routine, getting used to the Zooms and doing everything else. I do miss the face-to-face contact. I do miss the dinners. I do miss the bonding with kind of all the founders. But we're trying to find other ways to do it over Zoom. But yes, productivity has increased substantially. I gotta be honest with you.
Yeah. A minute ago, you were mentioning the team, and it seems to be this reoccurring theme. I'm wondering, though, is there a particular skill or mindset of yours that you just find hardest to pass on to even the most elite members of your team?
I would just say that it's funny. Someone once joked that being a venture capitalist is like training a fighter pilot. It takes 10 years and $30 million lost to actually train a VC. And this is back early in the day. Things have all accelerated now. This is back in the late 90s, but things have all accelerated now. And I think that it's just kind of, it's an apprenticeship in a way. And I think osmosis, right? I think helping people flip their framework. I think people aren't used to thinking like what I mentioned earlier is why can someone do something, and why can someone defy the odds? Like, how does that happen? So not only seeing that why, but also seeing the people that have done it before. Like, let's go back and just look at kind of all the things that were against all 3 or 4 or 5 of our top companies so far. There are a lot of things, and yet they kept sticking with it. So And I think that it's easy to say like, hey, so I can see the future, I can bet someone, but you actually kind of have to look back at some of your successes and failures and learn from that. And so I think that osmosis takes time. You can't just have someone learn that overnight.
Yeah, you bring up a really interesting point. And certain times it's not even that someone needs that bit of advice. It's almost just knowing that someone else has done that before and that's possible for them. It's just that mindset, it almost unlocks this wall or a screen's move for them.
That is, you're absolutely right. And you just have to see it and experience it yourself. And I think ultimately when you actually, when my teammate writes that check for the first time where they're seeing the future and they're living with that, on there because they're the ones pressing for that opportunity, that's when you really, really absorb everything.
I'm thinking about that absorption that you just mentioned. Has there been just a point in your career where you feel like you were just learning in dog years, where everything was just happening faster and just like your personal growth, was that just some crazy level?
It's funny. I just feel like every day is like that right now still. I got to be honest with you. The only difference is today versus before. That village that I have that we can bring to bear, right? Because I always ask about what is the unfair advantage that your partner is going to bring to the table. Now we have a village of experts, just any category possible, really successful folks. Feel blessed to have that. But back in the day, I was a village of one. so it's like, hey, you're looking. Look, I'll work hard for you, but I don't have anyone else that will surround you on the table. And then it was a village of 5 and a village of 10. Now we have a village of 100, 200 folks. But that's the only difference now is that we can actually, I can pick up the phone or reach out and I can pretty much get to anyone now. And before they're like, who are you? Who's Boldstart? Who's anything else? Look, frankly, that's still like that today too, which is fine. And I always want to find the way that I can motivate our team and myself to kind of, keep that chip on the shoulder. But that's the big difference is that I'm always learning, but we just have a network now that people have like, oh yeah, man, you guys, pretty cool. Like I'd love to work with one of your companies, right? Because I think it'll be a good chance of being successful.
Yeah, I'm thinking about that village of one mentality, and for those people in the successful companies, they're able to attract that additional talent and build their own network there. What have you seen in the best network builders?
Oh, they actually treat it as a job.
Yeah,
I mean, they're obsessive about finding time or carving out time in their calendar to constantly network with people. And you know what? The founders that actually hang out with other founders to share learnings and all the other stuff. I mean, you can see that there are some of the folks, that are doing it. Two is on the developer first approach. In terms of building community, I like to take it. Usually takes a couple of years, right, to kind of build that community. So you've got to be invested in that too. We need to know the plan early. How you're going to go kind of, back in the day, it was like, how do you go present at the events? How do you do the hyper local events, right? It starts even hyper local to kind of get that going. I mean, it doesn't happen overnight, but you can see that it's part of their ethos.
As we wrap up here, one of the things I'm really intrigued by, I know you were an early blogger early on a while ago and still distilling.
You found some of those in 2003 or 4?
The internet's an unbelievable thing. But I'm always curious, someone at your level, when you're distilling down your thinking, what does that look like? How does an idea hit you enough where you say, I'm going to take the time to write on this?
That's so great. So it's funny, like my blogging has really turned into tweets or tweet storms lately. And it's kind of like, I just had this conversation 3 times, with 3 different founders this week. Let me just share something. Or maybe me and my team were talking about something as the second time it happened and just share something. And, as you can tell, that kind of my thing is all about trying to how to distill it in the shortest way possible. And that's such a challenge to think through from that perspective, to share something that's meaningful. Like I was actually thinking about, it took me 20 plus years of learning to distill kind of a couple of weeks ago, how investors can be great partners to founders. And I called it like the 3 C's or the 3 CHs, right? I kind of have these things, right? But it was, a good investor knows when to cheer, right? And a good investor also knows when to challenge. And a good investor also knows when to chill, right? So I kind of think of that, but that sounds so simple, doesn't it? I mean, that took 24 years of really thinking about it. But the thing is that founders don't want cheerleaders all the time because you're not going to help them build a better business. So when things are going really well, you want to challenge them. How do you add another 0? How do you do something better? Right. So that's kind of when they need, when they're actually kind of in the dumps, right? When things are going hard is when you want to cheer them on. Like, come on, you can do it. You can do, you can do this. Come on, let's go through it. And then there's just sometimes, they're working on a big product release or things are just incredibly busy right now, you just need to chill.
Yeah.
Do nothing. Wait for them to pull in. But that has taken 24 years of wisdom to really distill that in a way that makes sense. But I find that something that I always think about every time we work with founders is where are they mentally in that? Where's their headspace there? Because everyone's always talking about the X's and O's, kind of but the mental aspect, as you know, it's a brutal business, to start your own thing.
Yeah, it's so funny. I was just talking to a mentor the other day just about this, that like these universal truths and the deepest truths, they're just the simplest things, but they're just so hard in practice, and it takes so much real-time experience to actually be able to distill them down. So it's something I really appreciate of you, and definitely learn from there. I am wondering, though, as we wrap this up, I feel fortunate I get to have these great conversations. Is there anyone throughout history, they could be alive, dead, just not a family member or friend, that if you were going to sit down for an evening, grab the microphone, just have a great conversation, who would that be?
Wow, that's a really good question. Who I admire is Warren Buffett, in a way. And while he is not a tech investor or whatnot, what I like about Warren Buffett is that he said that, look, he's in Omaha, he does his thing, right? He has his thesis, he does his thing, he stays true to who he is, and he's a good person, and he's stuck with it all the way along. And I think that I kind of like that, because I kind of feel the same way about us in the way, being in New York, doing enterprise. We're not in the place that was kind of seen as a hot enterprise space. We're not in the heart of the valley, but that allows us to have headspace to think creatively and differently. And I think that was, something that I do admire about him. And he started with nothing too. I mean, you watch some of those videos about what he did and how he did it. It was just kind of one thing after another, right? Heads down, finding one opportunity and then building from there. So I do admire kind of, what he's done.
It's really funny, actually, that was your answer. So in preparation for this, I kind of just distilled down, I thought, you to a core, and it was true to himself. Everything you did might have been against the grain, but it was so true to you. So it's just, you can see where you pull from other things. And I'm even one of those people learning from you, being true to your core and following what is your deepest belief. So no, I appreciate hearing that answer.
I'll tell you one other thing. I'm reading, I have a great book that's really interesting. I'm really into mythology and classical stories. I think my daughter actually wants to be a classical kind of major, but I'm reading this book by Joe Campbell called The Hero with a Thousand Faces. And it goes through just the, and he's a professor, I think, at Columbia, but it goes through kind of the story of myth and the story arc of a hero. Hero comes in, there's a challenge, they rise to the challenge, and then usually there's a tragedy, and somehow they rise from the ashes, right? So just that whole thing reminds me of founders, just every day. I always like to look at history, and not that history repeats itself, but history rhymes in a way. And I was trying to look, and I'm thinking about that story. Every founder has a story arc too, and it's always kind of like that as well. And so I'm always trying to tie disparate pieces together. Yeah,
Joseph Campbell, one of those geniuses in terms of making things so simple and breaking down all of history just to those 7 steps. Yeah,
I admire that. So exactly, that to me is the essence of genius, is when people can do that.
Yeah, absolutely. Well, Ed, this has been too much fun. You're someone I've mentioned, learned through so much throughout the years, continue to learn from. This has been a true pleasure. Any parting advice or places that you want listeners staying connected with you, or anyone who's got a great idea to hit you guys up at Boldstart?
Yeah, just, you can actually find me at twitter.com/edsim, EDSIM. And you can DM me, reach me at any point in time, and I'll share kind of some of the things that I'm going through and learning. And the last thing I can say is that, hey, if you're passionate and you have a vision, stick with it, because it's, you're going to find 10 different things and 10 different people to say, no, you can't do it. And if you believe in yourself, then you'll find a way.
Awesome, Ed. Amazing stuff once again. And thanks again for joining us on What Got You There.
Thanks, Sean.
What got you there with Sean DeLaney? 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 What got you there with